Hey savvy traders and aspiring investors. Ever wondered what a truly jaw-dropping cost to borrow fee looks like for short sellers? Today, we're diving deep into a stock that's not just hard to borrow, but punishingly expensive for anyone betting against it. We're talking about the Grow Hub Limited, ticker TGHL. We'll break down why this infrastructure software company has landed on our hard-to-borrow screener and what it could mean for potential short squeezes. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investments, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show TGHL logo/chart. Let's get straight to it. The Grow Hub Limited, trading as TGHL, operates in the technology and software infrastructure sector. This isn't just any tech company. TGHL is an investment holding company that provides product traceability, data analytics, and product trading facilitation solutions both in Singapore and internationally. Think about tracking products from raw materials to final delivery. That's their game. With a current market cap of just $30.09 million, it's a small cap player, but one making big waves in the borrow market. Now let's look at the recent action for TGHL. Show price chart, highlight numbers. Today, TGHL is up a solid plus 7.96%. Over the last 5 days, this stock has surged an incredible plus 93.34%. And if you look at the last 30 days, TGHL has rocketed an astonishing plus 165.22%. Volume-wise, today we saw 1,827,800 shares trade hands. This is actually 0.2 times its 30-day average volume of 10,198,133 shares, meaning today's volume is lighter than its recent average, despite the positive price action. The estimated float for TGHL stands at 12.7 million shares. These numbers are crucial as we unpack the hard-to-borrow situation. What is cost to borrow and why it matters? So, what exactly is cost to borrow, or CTB? In simple terms, it's the annualized fee that short sellers have to pay to borrow shares of a company they want to bet against. Imagine it like renting a car, you pay a daily or annual fee to use it. For short sellers, this fee is paid to the broker who locates and lends them the shares. Why does it matter? Because a high cost to borrow is a huge red flag for short sellers. It signals intense demand to short a stock, coupled with a very limited supply of shares available to lend out. When this fee skyrockets, it means holding a short position becomes incredibly expensive, eating into potential profits or, more likely, amplifying losses. Yes, these fees can easily exceed 100% annualized, as they reflect real-time market scarcity and demand for the shares. Why this stock is hard to borrow right now. And this is precisely where the Grow Hub Limited TGHL enters the spotlight. TGHL appeared on our hard-to-borrow screener with a mind-boggling, almost unbelievable annualized cost-to-borrow fee of 773.1%. Pause, emphasize number, let that sink in. This isn't a typo. This is one of the highest annualized fees we've seen, indicating an extreme scarcity of shares available for shorting. While the exact number of shares currently available to borrow is unknown at this very moment, such a high CTB strongly suggests that very few shares, if any, are left on the shelves. For any short seller currently holding a position in TGHL, they are bleeding capital at an astounding rate every single day, just to keep their position open. This creates immense pressure. Now, it's important to be balanced. A sky-high cost to borrow does not automatically guarantee a short squeeze. Sometimes, it can also indicate that short sellers have incredibly strong conviction in their bearish thesis and are willing to pay almost any price to stay short. However, when you combine a 773.1% CTB with TGHL's recent price action over 165% up in 30 days, that conviction gets tested very, very quickly. Squeeze mechanics explained. This brings us to the mechanics of a short squeeze. What actually happens? When a stock's price starts to rise, and the cost to borrow is astronomically high like TGHL's, short sellers face a dilemma. They're losing money on two fronts: the rising share price and the daily borrower fees. At some point, this pain becomes unbearable. To limit their losses, short sellers are forced to cover their positions by buying back the shares they initially borrowed. But here's the kicker: when many short sellers try to buy back shares simultaneously, it creates a sudden, intense surge in demand. This forced buying drives the stock price even higher, trapping more short sellers, and creating a vicious cycle of buying that can send a stock parabolic. It's like a financial chain reaction. TGHL's current situation: its sector, small market cap, incredible CTB, and significant recent gains all contribute to a potential environment where short positions are feeling maximum pain. Our internal composite squeeze score for TGHL, which combines factors like CTB level, borrower supply, float size, and price momentum, currently stands at 46.5. This isn't the highest score we've ever seen, but it certainly indicates that many of the core components for a squeeze scenario are present and active for the Grow Hub Limited. Dilution risk check. One critical factor that can make or break a short squeeze thesis, even with high borrower fees, is dilution risk. Dilution happens when a company issues new shares, increasing the total number of shares outstanding. If a company undergoing a squeeze decides to issue millions of new shares, it essentially floods the market with supply. This new supply makes it easier for short sellers to cover their positions without driving the price up, and it dilutes the value of existing shares, effectively neutralizing or negating a potential squeeze. Good news for TGHL bulls, our check found no recent dilutive SEC filings like S-1s, S-3s, or 424Bs in the last 90 days. This means there's no immediate, publicly announced risk of the company flooding the market with new shares that could undermine a squeeze thesis. We also found no recent reverse split for TGHL in our look-back window, which can sometimes be another cautionary flag. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you keep an eye on if you're watching TGHL? First, continue to monitor that cost to borrow. Any sustained decrease could signal lessening pressure, but if it stays elevated at 773.1% or even climbs higher, the pressure remains on short sellers. Second, watch the supply of shares available to borrow. While currently unknown, a sudden announcement of 0 shares available would be a huge indicator. Third, pay close attention to volume. While today's volume for TGHL was 0.2 times its 30-day average, we'd want to see an increase, especially on green days, potentially exceeding the 10.1 million share average. Increased volume on upward moves, particularly if it's accompanied by sharp price increases, could suggest short covering is underway. Finally, keep an eye on the price action itself. Can TGHL maintain or build on its impressive plus 165% surge over the last 30 days? Sustained upward momentum forces more short sellers into uncomfortable positions. The Grow Hub Limited (TGHL) offers a fascinating case study into the world of hard-to-borrow stocks and potential short squeezes. This infrastructure software company, with its $30.09 million market cap, is currently imposing a staggering 773.1% annualized cost-to-borrow fee on short sellers. Combined with its significant recent price appreciation and a clean bill of health on dilution risk, TGHL has many of the ingredients that create a high-pressure environment for anyone shorting the stock. Remember, a high cost to borrow is a powerful signal of market dynamics and potential pressure, but it is never a guarantee of a squeeze. Always conduct your own thorough due diligence. If you found this deep dive into TGHL informative, please hit that like button, subscribe for more unique stock breakdowns, and let us know in the comments what other hard-to-borrow stocks you'd like us to analyze next. Until then, stay smart, stay informed, and happy trading.